you want to know whether or not the very next candle will go up or go down. Luckily for you, I've spent the past year refining a strategy that has figured this out. I have cracked the code on this. You only need to wait for a swing high or low to form inside of a key level. Then you are trading the candle afterwards. Inside of this one candle you are trading and focused on will be the easiest trade you have ever found. The time has gone for no longer needing another model again. All we are using is a swing high or low inside of a key level and then trading the candle afterwards. This is expanding upon my one candle theory. Let's not waste any time and dive straight into this video. Take a look on the chart here. You can see a depiction of a bearish example of what I'm talking about and a bullish example of what I'm talking about. Now this key level here is really the key behind this. This needs to be a key level that can be a fair value gap, it can be an order block, it can be a breaker block. It just needs to be a key level. It is not a key level unless it is in a premium on a bearish example or in a discount on a bullish example. Then we have a depiction of candlesticks. The first candle expands into the key level. The second one closes inside the first candle. The third one is a smaller candle, which then at that point we have created a swing high. Now, the swing high is created when we have a lower high to the left of the top candle and a lower high to the right of the top candle. That is now a swing high. We are then focused on this candle here. This will be the large expansion you are looking for. Inside of this one candle, you will find the easiest low-hanging fruit trade ever. You can trade it below here to a discount key level or to candle one's low. Candle one's low will be key liquidity. Key liquidity because this is the low that ran up into the key level. We are using this low as a target and any discount, fair value gap or order block below it. In the bullish example, it is the exact same. You get a candle that trades lower, a candle that creates the swing or starts the swing, and then the third candle that creates the swing. This third candle confirms the swing again into a key level. This key level is in a discount. You now wait for this candle. This candle will be the huge expansion. This candle will take out candle one's high and run out any premium key level. Okay, so with this I have created a model for you to trade. This can be your only model. You can make so much money with this off of prop firms. If you trade it correctly and you get the logic and narrative right, you can rinse prop firms this year. All you need is this framework here and this framework here. This is very simple in theory, but we will dive into the charts and get into this. Let's not waste any time and go straight into some examples. Now, as you can see, we are on the Nasdaq daily chart. The daily and weekly chart are really key for this because they allow us to frame expansions. What you do is figure out a dealing range straight away. Look, we have a impulse swing lower. Now we can frame this dealing range by the high to the low of the impulse swing. Above 50% is a premium, as you guys know. As soon as we hit 50% and a key level, what is the key level here? Well, if you take a look, we have a large fair value gap. But when we have a big fair value gap like this, we can even refine the key level lower. What do you see here? The last set of up close candles before they drop down. Now that is technically your order block, but we can use this to refine our level even more. Now, so we have a key level checked off. Remember, that was the first thing I told you guys in the intro. That is the most important thing, a premium key level. Now we trade into that key level. As soon as we trade into that key level, guys, we must see a reaction. We must see the model form. The model I've given you in the start. Okay, remember what we are waiting for, a swing high to form. Look what happens. We trade into the order block, into a premium. We then have this candle close inside the previous candle. At this point, you are waiting for this third candle to form. Remember I said the third candle should be a bit smaller. Now we wick down a lot, but notice where the body closes. The body rejects a lot, which gives us a smaller range to work with. This is good because this allows us to trade that fourth candle we are looking for. That one candle that we can find a lower time frame trade in. That one candle that is set to expand. This specific candle is set to expand because of the framework. Because of the framework in the sense of a key level and key premium level, and then our model presenting itself, you are then trading this candle here. This candle here is the key. Notice how we expand much lower and we continue expanding lower until we take out the sell side liquidity below this swing low. So if I refine this, again, trade into the key level, swing high forms 1, 2, 3. This fourth candle is the expansion candle, and look how we expand here. We expand into this rejection block. This would be your target. There's one target, and look at 50% of this wick, because wicks are gaps. So you can measure this wick, use 50% as a target. Eyeballing it, it comes out about to 50%. So all of that I just outlined, that one expansion candle, all came from the framework of dealing range high, dealing range low, trade back above 50%, then reject our key level. Now, which candle gives us the rejection? The second candle is the one that gives us the rejection. This is the candle that confirms to us what we are likely doing. We are likely on the right side of the market now. The third candle, we let print. You walk away and you let that develop, because often you think the swing high is forming and then the third candle runs higher and takes out this candle's high. We don't want that to happen. We want an 80% win rate model, right? You want a model that you can trade all of the time and be your only model. After this candle forms, we then confirm that key level. We have fully confirmed the key level, and the fourth candle is due to expand if we haven't hit a key discount level. Notice how this wick here, or rather this rejection block, doesn't get hit on the third candle. So we have 1, 2, 3. The third candle's low doesn't hit our key discount level. The fourth candle is then set to expand. So many of you may be asking, how do we trade this fourth candle? You said in the intro that we are looking for one trade inside of the candle. That is correct. We drop down to a lower time frame and focus in on this candle here. You focus on this candle because it gives you an entry, and you can really rinse prop firms with this. Why? Because the risk to reward can be so high. Now, why can it be so high? Again, because this candle is set to expand. Expansion really gives opportunity. Let's drop to the 1 hour, or rather the 15-minute, and see what we can catch here. If we zoom out and go back to our candle, remember that one candle that was set to expand. The one candle set to expand starts here, right? Now, midnight opens up that new candle. Remember, this was our rejection block. This right here is the third candle. Why do I know it's the third candle? Because we didn't reach that rejection block. Now, if we divide all the candles up individually by using midnight New York time, remember guys, it is always New York time because this is what the algorithm refers to. Now, these are the 4 candles. If I make these a bit bolder, these are the 4 candles here. We have candle 1 that trades higher, candle 2 that closes inside of candle 1, candle 3 that confirms our key level, and then candle 4 is the one that we are trading. This is the one that we're trading. Look at the drop down, you can catch it. Okay, that's the key. That is the candle you want to trade. So candle 1, candle 2, candle 3, candle 4. If we zoom into candle 4, look what happens here. Remember, this is our key discount level from the daily chart. Look what happens here. We displace lower, breaking a swing low. So we displace lower and leave a fair value gap. Does that fair value gap ever get traded above? No. Does that swing high ever get taken out? No. Do the bodies here ever close above 50% of that fair value gap? No. You have an entry. It is that simple, guys. Notice how waiting for that 4th candle to appear after all of that previous framework, notice how easy it is to trade. You've all seen this model before, right? You've all seen this pattern. Low, high, lower, low. With displacement, a key fair value gap is created, and look how many times we run into that fair value gap. 3 times it gives you the opportunity for an entry. 1 during London, 1 in the middle, and 1 during New York. As we start to drop here, look at the expansion that comes in. at key times. Look at the expansion that comes in here. How easy is that? Now, if you, let's say you missed the fair value gap, even if you shorted as we start to run away, stop above the swing high and then target that. How easy is a 1 to 4? Look how easy that becomes. All from that one candle. But it's not just a one candle. It's the swing high or low being created and then trading that fourth candle. Let's dive into another example on the daily or weekly chart, but a bullish example this time, so I can really hone in on what it is you are looking for. Again, for our bullish example, we are looking at Nasdaq on the daily chart. Take a look at the framework here. Can you identify the key level? And can you identify the candle we are meant to be trading? I'm going to give you a few seconds on that. And then also, can you identify our target? What would we be aiming for? Take a look at this portion of price action and look how we trade into this low and then reject from it. We trade into the low. Why is this a key low? Because it's the key low over here. It's the obvious swing low. This is the obvious low that rejected from. So this is a key level, a bullish key level. If we are below here, why is it discount? If we are below here, naturally we are in a discount because we are below an old low. That means naturally you are inside of a discount. Now, again guys, what are we waiting for now? We're waiting for that swing high to be created. Swing low, sorry. When we trade into the level, this is the second candle because we have a low to the left of it. And now we are waiting for a low to the right of it to form. Remember, you are not trading this candle. You are waiting for this candle to close because this candle could easily take out that low and then form the model again. This is the candle you're trading here. A really nice expansion into where? We'll take a look at this range. Remember the low that purged over here, premium and discount. Can you see a key discount level here? I can. This fair value gap, more specifically the top of the fair value gap. So this is the top of that fair value gap there. Remember I said that you need to trade into a key premium level if we are bullish. Now, again, let's drop to the 15-minute and find an entry here. You go over back to our fourth candle because the fourth candle is the key one you're trading. Now, does this look familiar? Of course it does. It looks like a market maker buy model. Now, where does our fourth candle open up? Midnight, New York. Our fourth candle opens up here. So at this point, we are ready. We are ready to take a trade. And where would we take a trade? Look, New York, 9:15. Look what happens here. We have our range on the day. We have a massive run up, small fair value gap there that you could trade. But either way, if you miss that, we have a massive run higher. We then need to wait. Why do we need to wait? Because here we're consolidating. We are overextended. You then wait for a drop lower. This fair value gap is key. Why is this fair value gap key? Because it was created at the very end of London session. That is why it's key. And now this is a small fair value gap. This is a really small fair value gap. But why do we hit this fair value gap and move away so much? Because it overlaps with this wick. So we anticipate no bodies closing inside of it. And then take a look what happens. When we get the Judas swing lower, we take out a key liquidity level here. We then expand into that key premium level, being the daily fair value gap. Look how clean this day is. Let me take you into the lower timeframes here. Order block holds. Again, this small fair value gap inside there holds. Notice how all of our key levels are holding now. You guys want to know which key levels it is you're meant to be trading. Take a look. If you wait for this one model to present itself, guys, all of your key levels, all the PD arrays you've learned will hold. This is how you stop getting stopped out and how you catch these large expansions. You will no longer get stopped out if you start using this model. Seriously, start using this model. Go back test this model. The fourth candle is the key. You can predict the very next candle with this. And I really need to emphasize that. I will leave you guys with that for now. I will leave you to go and study the swing highs and swing lows, but more specifically that fourth candle in the formation. I teach this to my Discord all the time. Whenever they see me take a trade, it is usually on an expansion candle. These candles are the easiest trade. You will never need to learn more ICT ever again. You will never need to go through hours of videos. You will never need to watch other mentors. You can trade this fourth candle and make a really, really nice living and change your life. But it is important that you go and backtest this, collect data on it yourself, and then come back to me. With that being said, if you did enjoy the video, please do subscribe if you are new. We are bringing the content heavy this 2025. If you want to keep up to date with when my Discord will be opening, join the Telegram group below. It is the top link in the description. Join that group and you can keep up to date with me when videos are dropping, and check out my Twitter as well because I update on there as well. We will be diving into deeper on this fourth candle. Okay, we will go deeper on this if I get the support on this video that is needed. If we get the support, I will go deeper in my Telegram as well. So do make sure you join that Telegram. Top link in the description again. With that being said, drop a comment with any feedback if you did enjoy the video. Drop a like as well. Subscribe if you're new. And I thank you as always for watching. I'll catch you guys in the next one.